stop scrolling right now. If you've ever received or given money as a gift in the UK, what I'm about to reveal could save you tens of thousands of pounds in unexpected taxes, fines, and HMRC investigations. Most people think cash gifts are safe, but HMRC has a hidden rule that can hit your family years later, and if you make one small mistake today, it could cost you everything. In this video, I'll explain the secret exemptions, the deadly 7-year rule, and exactly what you need to do before January 2026 to protect yourself. Stay with me, because missing even one detail could cost you dearly, and I'm going to show you how to make sure it never happens to you. If you want to stay ahead of HMRC updates, cash gift rules, and all the money-saving tips I share only here, this channel is your go-to place. I upload videos like this regularly, so hit that subscribe button right now and make sure you don't miss my next update. You'll thank yourself later. Let's start with the most important thing in simple UK English. In the UK, there is no special gift tax. If someone gives you cash, you normally do not pay income tax on it. HMRC does not treat a normal personal gift as wages or earnings. So if your parents give you money, if a relative helps you out, or if someone transfers cash to you as a genuine gift, you usually don't need to declare it as income. This is where many people stop listening, and that's where the danger begins, because the real rules are not about income tax, they are about inheritance tax, and inheritance tax works in a very different and very sneaky way. HMRC looks at cash gifts mainly through inheritance tax rules, not at the moment the money is given, but years later, often after someone has passed away. This is why families get shocked. Everything seems fine for years, and then suddenly, during probate, HMRC asks about gifts going back up to 7 years. This is called the 7-year rule. In very simple terms, if you give someone a cash gift and you live for more than 7 years after giving it, that gift usually falls completely outside your estate and no inheritance tax is due on it. But if you die within 7 years of giving that gift, HMRC may count some or all of it back into your estate depending on the amount and the circumstances. Now here is where people make costly mistakes. They think there is a fixed limit on how much cash they can give, like I can only give $3,000 and that's it. That is not true. You can give as much cash as you want to anyone at any time. There is no legal maximum. However, the tax consequences later depend on exemptions and timing. One of the most important exemptions is the annual gift allowance. Every tax year, you can give away up to $3,000 in total, and that amount is immediately outside your estate for inheritance tax. If you didn't use last year's allowance, you can carry it forward for 1 year only. That means in some cases you could give $6,000 in one go and it would still be fully exempt. There's also a small gifts allowance that many people forget. You can give up to $250 per person per tax year to as many people as you like, as long as you are not using another allowance for the same person. This is useful for helping grandchildren, friends, or family members without touching your main $3,000 allowance. On top of that, there are special allowances for weddings and civil partnerships, where parents, grandparents, and others can give larger sums tax-free. These rules have not disappeared in January 2026, but HMRC is paying closer attention to how people use them. Another extremely important rule, and one that HMRC often challenges, is the rule about gifts made out of surplus income. This sounds complicated, but it's actually quite simple. If you have regular income, such as a pension or salary, and after paying all your normal living costs, you still have spare money, you are allowed to give that spare money away regularly. These gifts can be completely free from inheritance tax, even if they are large, and even if you die within 7 years. The key conditions are that the gifts must be regular. They must come from income, not savings, and they must not affect your standard of living. The biggest mistake people make here is not keeping records. If your family cannot prove to HMRC that the money came from surplus income, HMRC may refuse the exemption and charge tax later. January 2026 is a warning point because HMRC is now much stronger on evidence. Bank transfers are tracked, data is shared between institutions, and during probate, HMRC can and does ask for years of bank statements. If your executor cannot explain where money went, HMRC may assume it was a non-exempt gift and add it back into the estate. This can push an estate over the inheritance tax threshold and create a bill of tens of thousands of pounds. All of this can happen even though the person who gave the gift never paid any tax while they were alive. Another dangerous area is what HMRC calls gifts with reservation of benefit. In simple terms, this means you give something away, but you still benefit from it. For example, if someone gives a large cash sum to a family member, but then continues to use that money as if it were their own, or the gift is only on paper, HMRC may say it was never a true gift. The same idea applies very strongly to property, but it can also apply to cash arrangements that are not genuine. HMRC looks at reality, not what you call it. If you keep control or benefit, the gift may be ignored for tax purposes. People also ask, do you have to tell HMRC when you give or receive a cash gift? In most normal situations, the answer is no. You don't need to phone HMRC or fill in a form just because you gave your son $10,000 or your daughter $5,000. But that does not mean HMRC will never know. The information usually comes out later when someone dies, or if there is an investigation, or if large unexplained sums move through accounts. That is why January 2026 guidance from advisors is very clear. Document everything. A simple note saying who gave the money, when, how much, and why can save your family from huge stress later. Another common misunderstanding is thinking that the person receiving the gift will be taxed later. In most cases, inheritance tax is paid by the estate, not by the person who received the gift. However, in some situations, if the estate cannot pay, HMRC can pursue the person who received the gift. This is rare, but it does happen, and it is another reason why people should not be casual about large cash transfers. Let's also talk about intention, because HMRC cares a lot about intention. If you suddenly give away large sums of money when you are already seriously ill, HMRC may look at that very closely. Even if the rules technically allow the gift, it can still be challenged if the evidence is weak. Planning early, using allowances properly, and keeping records is always safer than rushing later. This January 2026 update is not about new gift taxes being introduced overnight. It's about enforcement, digital records, and HMRC being far more confident in looking back and asking questions. Many people think they'll never check. But families across the UK are learning the hard way that HMRC does check, sometimes many years later, when it's too late to fix mistakes. So the big message is this: cash gifts are not automatically taxed, but they are never invisible. The rules are generous if you understand them and dangerous if you ignore them. Using allowances, understanding the 7-year rule, making genuine gifts, and keeping clear records can protect your money and your family. Ignoring these rules, assuming everything is fine, or listening to half-truths can lead to costly tax mistakes that last for years. If you are watching this and thinking, this affects me or my family, then you are already ahead of most people. Knowledge is protection when it comes to HMRC. Take this seriously, talk about it with your family, and make sure that the money you give as a gift truly helps the people you care about instead of becoming a future problem that no one saw coming. Stop scrolling right now. If you've ever received or given money as a gift in the UK, what I'm about to reveal could save you tens of thousands of pounds in unexpected taxes, fines, and HMRC investigations. Most people think cash gifts are safe, but HMRC has a hidden rule that can hit your family years later, and if you make one small mistake today, it could cost you everything. In this video, I'll explain the secret exemptions, the deadly 7-year rule, and exactly what you need to do before January 2026 to protect yourself. Stay with me, because missing even one detail could cost you dearly, and I'm going to show you how to make sure it never happens to you. If you want to stay ahead of HMRC updates, cash gift rules, and all the money-saving tips I share only here, this channel is your go-to place. I upload videos like this regularly, so hit that subscribe button right now and make sure you don't miss my next update. You'll thank yourself later.